Now in your business news, the Securities Exchange Commission has approved a regulatory framework to facilitate the issuance and listing of infrastructure bonds on the Colombo Stock Exchange. This decision by the SEC is aimed at fostering both foreign and local investments in infrastructure projects, which will contribute to economic development. The SEC noted that the new framework is necessary for Sri Lanka to develop a market for infrastructure bonds and raise the long-term capital needed for infrastructure facilities.
The Securities and Exchange Commission recently approved a regulatory framework to facilitate the issuance of listing of infrastructure bonds on the Colombo Stock Exchange. Issuing a statement in this regard, the SEC noted that the scope of infrastructure development in emerging economies has evolved significantly in recent decades and now comprises a broad range that includes traditional infrastructure projects such as power, oil and gas, and water, as well as low-carbon, climate-resilient infrastructure projects such as renewable energy projects. The SEC said it carried out a study of comparable jurisdictions which had successfully used infrastructure bonds listed in the capital market to finance major development projects of their respective governments. Aimed at fostering development, transparency, and investor confidence in the capital market, the SEC has set a capital market reforms agenda which includes 12 key areas for action, including roads, rail, water management, waste management systems, airports, seaports, mixed development projects, natural disaster protection systems, deep water ports, gas supply systems, utility projects, and telecommunications infrastructure. The regulatory body further said that the introduction of infrastructure financing products are part of the reforms agenda and that the CAC is expected to market this product actively among potential issuers. The regulatory framework for infrastructure bonds will include provisions to ensure investor protection, stringent due diligence, disclosure, and reporting requirements for issuers in order to keep investors informed on the performance of the infrastructure projects. Disclosure requirements include details of the project in which the capital raised is deployed or allocated, progress updates on how the project fulfills its core purpose and objectives, benefits to the public at large, and any deviations in the use or allocation of the capital proceeds.